We've got a management waiting by to speak with us. Rahul Patwardhan, the CEO of NIIT Limited, joins in now. Hi Rahul, afternoon. Q1 FY17 was good. You had a double-digit revenue growth for the first time in 16 quarters. Is this trajectory likely to continue for the next few quarters as well? And what's the outlook on individual segments?
I think the successful turnaround of the company is now behind us, and we are into the period of acceleration. And as I mentioned at the end of Q1, we are now into double-digit growth for the company, and I expect that to continue. And in fact, the intent obviously is to start accelerating that as we go over the next few years. So that's the direction. Having said that, for this financial year, we continue to hold to the outlook that we have given for the corporate business, which is 15% top-line growth and 12% EBITDA. And whatever improvements we do on EBITDA will be invested back into our advisory services and other capabilities for future growth. While the skills and careers business, we have talked about a high single-digit growth on the top line and a mid-single-digit EBITDA. And we continue to hold to that. In fact, we are more confident about it.
Well, Rahul, how many client wins you've seen in this quarter so far? And really, what's the revenue visibility?
Yeah, we aren't reporting client wins, but what I can say is that our pipeline is very strong. And I can also say that we have a number of deals which are near closure. Hopefully, many of them will close this quarter. It's possible, of course, that they may spill over into the beginning of next quarter. But we will be doing better in terms of our client wins in this quarter compared to previous quarters. And the outlook is very good. Overall pipeline is very strong. Sectors remain the ones that we've always been focused on, which is the BFSI, banking financial services, our life sciences sector, the high-tech sector, which is technology and telecom, and energy sector. But there we are focusing mainly on our existing customer base and growing the accounts.
Would you have any impact due to Brexit, and what kind of revenues come in from UK and Europe, and any currency risks that you foresee?
Yeah, good question. I think unlike the large IT outsourcing industry of India, our exposure is relatively more limited. And there are two reasons. One is that on our total CLG business, the proportion of the pound-denominated revenue is small. Second, the kind of customers we have there are global customers who, with the pound depreciation, actually have improved performance because most of the revenue is global rather than UK business. And third is that much of the business that we happen to be doing with UK customers or pound-based customers is naturally hedged because the revenue and expenses both are in pounds. So overall, because of all these factors, as well as the fact that our US dollar is appreciated in the same period vis-a-vis rupee, we've had actually marginal impact. Having said that, what can happen over the next 2 years is obviously difficult for anybody to forecast. All of us in the industry are obviously trying to anticipate what it could mean. But I believe for us, the impact, whatever happens, will be smaller than companies who are far heavily weighted towards the UK pound, as well as with a large offshore component of the cost base, so that when the pound depreciates, the rupee doesn't go down, and therefore they have a big impact on their profits. That situation will not happen to us.
Well, Rahul, in that case, would you need any funds to fuel growth that you're so optimistic about? Any equity raising plans?
At this point of time, there is no stated plan to raise equity from the markets. Having said that, as we're starting to accelerate, funding will be an important ingredient. Therefore, there's a lot of focus on our side to, with the improvement in our profit figures, our ability to raise funds from normal instruments that we currently use will improve. Second, as we start collecting our schools collections, the government schools business collections, our net debt levels will start going down significantly, and that will further increase our ability to raise more funds through our normal instruments. So at this point of time, going to the market to raise funds is not on the anvil. We believe that what we need over the next year or 2 years, we should be able to raise through our normal instruments.
A quick update then on the debt on your books currently.
Our current debt, when we closed end of Q1, was 130 crores. Of that, 90 crores alone came from the government schools outstandings, and predominantly a couple of states where we're now starting to receive collections in the last 2 quarters on a reasonably good flow. So we're expecting this now to start going down significantly over the next few quarters.
All right, then thanks so much, Rahul, for joining in and giving us those details.